So in this module, we need to identify the users of the financial statements and the objectives of the financial statements, and also to understand comparative analysis, both trend analysis and benchmarking, and where to find benchmark data for ratios. So the users of financial statements are similar for co-ops and investor-owned businesses. The main exception is that market analysts are key users of financial statements for publicly listed companies, but cooperatives are rarely evaluated by market analysts. So when you look at the users and uses of cooperative financial statements, they are the members or the owners, who of course interested in profitability and how funds have been used. Employees and unions, same thing, they're also interested in profitability and how the funds were deployed. Financial institutions, this would apply in cases where a co-op had a loan or line of credit, and they're interested in liquidity and profitability. And government regulators, so this would apply to credit unions and insurance co-ops. And again, the government regulators are very interested in liquidity, risk, and profitability. So when you look at ratios, ratios are very key to evaluating the cooperative's liquidity. For example, its current ratio. Does it have enough current assets to meet its current liabilities? Coverage, you look at debt to equity ratio. Activity, here one ratio could be the inventory turnover. And finally, profitability. So you look at profit margin and return on investment. So there is an article in the folder here on balance sheet ratios and analysis for cooperatives, which was put up by the University of Wisconsin at Madison. So when you're looking at ratios, there's two ways you can look at them. One is trend analysis. So here you're just looking at your own organization, your own co-op, looking at its performance over time, over perhaps a 3 to 5 year period. So when you look at the trend, you'll identify whether the cooperative is improving its performance or if it's deteriorating. But it's important to recognize, even if you are improving year over year, this might not really necessarily represent an excellent performance. You could be improving, but your performance could still be considerably lower than the industry. This is where benchmarking comes in handy. So benchmarking is when a cooperative, or any organization for that matter, compares its performance to the benchmark for the industry sector. So although it's difficult to find benchmark data specifically for cooperatives, it's still important for them to compare to relevant industry benchmarks. So the discussion board question here is, using the ratio information contained in the Center for Cooperatives, balance sheet ratios and analysis for cooperatives, using that information, select two ratios, one reflecting liquidity and one reflecting profitability. So use these two ratios to calculate liquidity and profitability for Vance City Credit Union and for TD Bank. And the links are in the file folder for those organizations. So what you want to do is, in addition to calculating the ratios, you need to interpret your findings. So explain what it is that the ratios are telling you about the financial health of each institution. So these are the links. And that concludes Module 8.